if we turn to choosing a broker, some of the considerations what you need to bear in mind when choosing a broker. Obviously, the instruments available, do they offer what it is you want to trade? No point going with a forex broker if you're looking to trade stocks, or a stockbroker if you want to be trading index futures or whatever. Some brokers will offer the whole lot, and that may be a good way to go, because if you want to expand your horizons and move from one instrument to another, you can do so without changing broker. But on the other hand, there's no point in going with a broker that offers stuff that you're never ever going to use. Next up, physical location. This is your physical location in the world and their physical location, and there's a few reasons why this is important to consider. Obvious one is currency. Are they going to accept your local currency? If you're trading US stocks, then you are going to be trading in dollars. Will they accept dollars? And so on. Fund transfers is another one. How will you get money into and out of your broker? Will they talk to your bank if you want to do wire transfers? Will they accept credit cards or whatever else? So this has a bearing on the location as well. And government regulation. What do I mean by that? Stockbroking, financial trading is pretty heavily government regulated in most countries in the world. So you want to make sure that you can take advantage of that regulation, because that, in theory, although in recent times we've seen doesn't always work, in theory that stops your broker doing dodgy things with your funds. But it's a good reason to perhaps go with a broker located in a safe modern jurisdiction and not some far off country that you've probably never heard of, where there's no regulation and nothing to stop the broker running off with your money. And another reason, I haven't put it on there, but another reason you may want to consider physical location is sometimes it's good to know that the broker has a physical presence in your country or in local to you, so that you can go and bang on their door if things go pear-shaped. Basically, there's a certain comfort factor in that, and again, depending on how important this is to you, if it's your livelihood, that may be a very important factor. And financial backing, this comes down to who the parent company of the broker is. Are they solvent? Are they profitable? Have they got money in the bank? Or are they about to go down the tubes and take your account balance with them? And this is information that you can find out by doing basic research on the internet about the company involved. Some more considerations, similar to software. Again, we've got support considerations. What hours are they available to get hold of them if you need to? If your internet connection dies in the middle of a trade, can you phone them up and get them to close out your trade? Will they even do telephone trades for you? And technical support as well is obviously a consideration. So you need to know that they're around at the same hours that you're trading. And what methods of communication have you got with them? Can you phone them up? Can you get them on email? Can you get them on instant messenger? If they don't offer telephone support, then that may be a big red flag to you. If you're day trading, obviously you need to be able to get in touch with them if something goes wrong. You need to be able to get in touch pretty urgently. If you're only doing buy and hold, maybe it's not so urgent, maybe just email support will be good enough. And it comes down to how you prefer to communicate as well. Price, again, this is as with the software, it comes down to you get what you pay for, and how much you're willing to pay will have a bearing on the services that are offered. Brokers will have different price implications. There's the commissions, obviously, that they charge on the individual trades. Those commissions may be on a fixed per trade basis, or indeed they may be on a percentage or a number of shares or number of contracts what you trade. Which is best for you will depend on the size that you're trading. Fixed commissions usually aren't such good value if you're only trading 100 shares or a single contract, but as you get into bigger size, then fixed price commissions may well work out cheaper. So again, that comes down to the kind of trading that you're doing and your level of experience and the size you're trading. And another price consideration is the minimum account balance. If you've only got a few $100 available, no point considering a broker that's going to want 30 grand in the account straight off. And fund transfers, some brokers will charge you to get money in and out of your account, some won't. That may be important to you, may not be important to you, but it's something what you should consider obviously before choosing the broker. And a few more considerations. Reliability, obviously we all want a broker to be reliable. How are you going to know? Best thing is to go and find some existing clients and ask them how reliable you found that broker. Order types, some of the fancier order types are not supported by certain brokers. Some brokers will have their own synthetic order types, and if your trading strategy or system relies on those types or you prefer using them, then obviously you're going to need to make sure that the broker actually offers them. And the supplied software, obviously all the things what applies to charting software apply to the software supplied by your broker as well. You need to make sure it will run on your machine. You need to make sure it will do everything what you want it to do. You need to have a look at the user interface. Is it something you're comfortable using? Do you understand it? Does it work in a way that's logical to you? Do they offer training for the software? Does it connect to other software? Does it connect to trading robots or scanning software or anything else what you might be using or reliant on? And does it have all of the features what you need? Does it do the kind of orders what you need? Does it have the ability to place automatic stops? All of that kind of thing, trading stops, all this sort of thing. You need to make sure that the software what the broker offers can do what you need it to do, and if it can't, you need to know that you can replace it with other software what can. So in summary then, because that sounds like a lot of things to consider, but in reality most of it is simply common sense. First off, and most importantly, know your own requirements. If you don't know what kind of trading you're doing, what your requirements are, then obviously you've got no hope of getting the best deal for you. So know what kind of trader you are, what kind of trading you're going to be doing, and start your research based on those requirements. Shop around, don't just go with the first broker or charting package what meets your requirements. They may not be the best one around, so do make sure that you find a load of them, make a list. Google is your friend obviously, and Yahoo and whatever other search engines you prefer to use. Make a list, go through, tick off the requirements as they meet them, and come up with a short list. And then once you've got your short list, try and find existing customers what are using those brokers on the list. Ask around in forums or chat rooms or whatever else it takes. But do this the right way round. Find the customers after you've got a short list. Don't go finding customers or other traders and say, who do you use? Because they may well be completely in love with their broker, recommend it to you, but it just doesn't meet your requirements. So again, make sure you know your requirements, find brokers what meet those requirements, and then and only then go and get recommendations on those brokers from customers what are already using them. And take trials wherever possible, particularly with software. Most of the charting software offers free trial versions or 30-day trial versions or whatever, and brokers often offer trial versions of their software or demo accounts, so take advantage of them. They're there to give you an insight into how it all works. Give it a try and see if it works for you, because even if it ticks all the boxes on paper, may well be that in practice it just don't work out for you. And don't be afraid to change. That's the last point. If you do have software or a broker and it ain't working out for you, there's no law what says you've got to stay there. There's plenty of competition in the market. Go and give something else a try. There's no point in sticking with something that isn't working out for you. So there we go. As I say, I can't give you a recommendation on what broker or what charting package to use, just because what works for me isn't necessarily going to be the best thing for you. So bear those points in mind, do a bit of research, and test it out is the most important thing, and you'll be golden. So hope that answers the question on brokers and charting packages, and we'll look at something different again in the next video.